Let's go over put credit spread tutorial from Market Chameleon. Just an FYI, we're gonna go over the filters. We're gonna go over one of the pre-settings right here. But before we do, why would you do a put credit spread? Why would you sell a put credit spread? If you don't know, this is one of my top 3 favorable income selling option strategy. And you win 3 times if one of the following happens. First of all, you need to pick a stock that you are bullish on. Ideally, high market cap that we know. We know a lot of swings. You know, the higher the market cap, that's safer. And I say safer in quotation. But basically, you win 3 times. You win, let's say the stock is $100. You win if the stock goes up. Okay, so that's one option. You win if the stock doesn't go anywhere. Okay, that's the second option to win. And you win if the stock even goes down, but only until your put credit spread expiration. So you're selling a put credit spread out of the money. Very important. If the stock is 100 and you sell, you sell a put credit spread. For me, I like to sell out of the money. So for example, the 95.94 or 91.90 or 95.90 and anything in between. I don't sell if the stock is at 100. I don't sell 102 and 98 put and sell 102 put, buy 198 put. No, I sell out of the money put. So let's go over this filter, because the other videos on the last couple of days I went over all of this. The last video we even went over this one, best by 10% edge. So let's go over the next two. The first one is market leaders positive theoretical edge. Okay, so this is the predefined market leaders positive theoretical edge. I assume before we even do anything, we got, Apple, Nvidia. This is going to be interesting. Let's do a quick disclaimer. First of all, know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And my name is Ziv, also known as Finance After 40. So, this Market Chameleon predetermined setup, okay, has all the market leaders that you know, like, and love, and a positive theoretical edge. What's a positive theoretical edge? That means that you are collecting even more income than what you should have based on history. So if you sell a put credit spread or market leaders, this filter will find you, for example, a trade that you're gonna make even more money than what you should have based on history. We're gonna look at a couple of examples. So let's see what they found here. The expiration is for the next 30 days. This is the default. You can change it. Okay, you got all those days in here to change. Spread up to $5, so $500 max loss. This is your collateral minus your income. So the most that you can lose is 500 minus the income. So this is a good thing for small accounts. Nothing in here. Return if stock is flat above 15%. This is pretty good. This is a good filter. What does it mean? Again, let's say you sell a 95 put and you buy the 90 put simultaneously. That's the 95.90 put credit spread, and the stock is at 100. If the stock is flat, your return on investment is over 15%, which is pretty good in less than 30 days or less. Now, they didn't change the earnings or dividend or company events, so this could be a little more volatile, but we got an edge. Okay, this is interesting, an edge of over 10%. Again, that means that you are collecting more money than what you should have based on history. Okay, above 10% edge, that's pretty good. Theoretical win rate, okay, and you got over 60% historical win rate based on history, over 60%. So that's good, that's an edge. Show best by theoretical edge by symbol. That means that they're gonna see theoretical edge. The filter will be the higher the income compared to other stuff. This is how they're gonna filter basically. Let's go this again. Best theoretical edge by symbol. It's gonna show us. Let's go back to summary. the stocks that have the higher edge and theoretical edge. So let's see what we got. The market leaders, Apple, Nvidia, we only got one page compared to like 150, so that's nice. So we had Apple, Nvidia, Google, Avago, Tesla, JP Morgan, Oracle, and NI. Now, this is nice. However, I want to filter this by, let's say, this one. Let's see what we got here. Oracle, I know they post earning next week. But I'm looking at this because if I filtered, I can filter by theoretical edge, and I do twice. And look at this, Avago, price today 154. And look what they found, 700 billion market cap. But look at this, this is insane. The price of the stock, 95 bucks, okay, 95 bucks. Another price of stock 154. Price of the put credit spread that you're collecting, the income, if you have done this trade. Next earning is tomorrow after market close. So there's still time, but because I assume because the implied volatility is super high, because there's earning tomorrow, you are collecting $95 on this trade compared to $8. That is that's more. That's like 13 times more. That is insane. That is absolutely insane. Let me read this again. You are collecting 95 bucks compared to $8, what you should have collected based on history. 42.6% edge, 99% win rate. The trade itself is selling the 150 put and simultaneously buying the 147 put. Down the stock price is 154, so that's almost a 10% leeway, which is very, very interesting to me. The max loss is 200 bucks, 205, and the max win is $95. This is actually an insane trade. The edge here is absolutely bonkers. Downside cushion, you got 3.4% for the stock to go down. Okay, my mistakes. It wasn't 10%. It was 3.4%. Yeah, I'm just a little tired during the day. But 154. So it needs to stay above 150 for you to make the entire income. Now, why I'm saying this is because the earnings, okay, so the IV is far. But the beauty of put credit spread, again, you win 3 times. If you're bullish on Avago that they will go up, let's say they go to 160 tomorrow after earnings or by expiration. Expiration is this Friday. If they go to 160, great, you win. Second way to win, if it stays the same, 154, great, you win. And if it goes all the way down, even if it goes down to 150.01, you win. 3 ways to win on this trade. This is absolutely bonkers. I'm not saying take the trade because they can go easily below 150 by expiration, but this is something to consider. And you got yourself Oracle, Tesla, and all those options in here. Let's see, Oracle, they also have earnings, but this one is interesting. Let's see, Tesla, what do we have with Tesla? They moved up today. You collect price 219, just for the example, and you collect 220 bucks compared to 160. This is your 21% extra edge, 66% win rate. And it tells you to sell to the 220 by the 215. I don't like it because you still need the stock to go above 220. It's up to you. You got Nvidia in here, 106, and you collect 190 compared to 145, 69% win rate. You sell the 105, you buy the 100 for October 4th. Okay, and there's a lot of options here. So this is one filter. I want to go over the next filter. If you just like the market leaders, this pre-filter could be for you. Now, something that I like best by theoretical edge and 70% win rate. That means that if I filter by this, the theoretical edge and high win rate, I'm going to collect the max income as possible based on history. So we got ourselves next 30 days. Same spread up to 500 bucks. Any positive return if the stock is flat. Any positive for theoretical edge, win rate over 70%, and show best by theoretical edge. So it's gonna filter. Let's see all the pages. It found 19 pages, but it's filtering, you see, by this, by the high theoretical edge. And the higher the edge, the more income you are making based on history. So let's see, this is the one that we saw. Now in here you can look at all of them, sure, but I like to go over the ones that have like high market cap stocks that I know that are less volatile, basically. So this trade with Avago we just did, they have earning. Let's see something else. Oracle we just did. Let's see NVO. What is NVO? Just remind me. Novo Nordisk. I don't know. I heard that name, but I don't know what they do. But if you do know what they do, the price 134 and sell the 136. So that's in the money. I don't like to do this. Let's keep going. We got Amazon. Okay, let's see what we got for Amazon. Price 173 and a half. And again, so you sell the 175, you buy the 170 for September 27, and you assume that Amazon will go above 175, collect $200 compared to 118. I mean, it's up to you if you want to play that game. Meta, Facebook, let's see what they have. 513. Okay, and this is interesting because now they tell you to the filter found sell the 510, buy the 505 for September 27, 26% edge, 81% win rate. What does it mean? That means that you are collecting, look at this, $180, okay, compared to 96 is what you should have collected. Basically, Market Chameleon just found you a trade on Meta, Facebook, Meta, whatever they call, that you are getting paid double than what you should have paid if you just go randomly around Robinhood and try to sell put credit spread. You are getting paid double by this 180 compared to not even $100, and it's already out of the money, 513. So you make money if the stock goes up to 5, doesn't matter, 520, whatever the case. If the stock stays the same, 513, or if the stock goes down all the way to 510.1 penny. Basically, your total risk is $320 to make 180. It's more than 2-to-1 ratio. If the stock is flat, if Meta doesn't move much at all in the next 2 weeks, you make 56% yield on your money. That's actually a good trade idea, not a financial advice, but I will probably, I might take it for my own account. Let's keep going. We got ourselves Home Depot. Let's see this one for the example, 364.8, and you sell the 365, 360. That's not for me. Let's see PayPal, what they have to offer us, 72.69, sell the 74.70. DraftKings, okay, price 34, sell the 33, buy the 31.5. So this is interesting because you're not risking a lot. You're risking 150 minus the income. The income is $40, so you're risking 110 to make 40 compared to $16, what you should have made before. Interesting. So that's more than double. 21.6% edge, 81% win rate. And this is just on page 1. You can also filter this instead of by theoretical edge. You can filter by theoretical win rate. Okay, so let's try this one. So you click twice. The minimum is 70%. So if you click twice, it's gonna find by high win rate. See 99, 99, all those stocks. But let's see what we got. Avago, Goldman Sachs, Berkshire Hathaway, and you see here you're collecting compared to 0, compared to 0, compared to 0, stuff that doesn't have any value, but there is value because implied volatility, because the stock is still trading and all that stuff, and you can just basically go and filter as you wish. If this was valuable, 7 days trial for Market Chameleon, link in the description below. I'll see you next time.